Thank you. Exchange-traded funds weren't spared in the big stock reversal of January 2022. ETFs collected over $36 billion of new money in January, which sounds like a lot, but that's less than every month last year. Fixed income ETFs like Vanguard Total Bond Market ETF gave up about $6 billion in January to investor withdrawals, the first month of net outflows since March 2020. Names like Spider ETF Trust, Tips Bond ETF, iShares Russell 2000 saw some of the highest redemptions as of late. And since the movement of cash in and out of ETFs doesn't necessarily equate to performance, take a look at some of the recent winners so far this month. You've got mostly a focus on metals as well as energy-related funds, and then you got the losers, which pretty much fall into the retail category, construction, as well as clean energy. But I want to focus on XLC for a moment. Just in particular, it has a 23% weighting in Meta, and of course, it got slammed recently due to that exposure. And how about ETFs that could get hit by another bout of volatility this week because of recent earnings? Pharma ETF, IHE, allocates 22% of its holdings to Pfizer alone. We could see some sharp swings tomorrow once earnings come out. And then you've got Coca-Cola, that is 10% of consumer staples ETF XLP. Coke's earnings come out on Thursday. And then last but not least, global travel ETF Away has at least 5% allocated to Expedia and 4% to Lyft. Both company earnings are out this week, so we could also start to see some swings. And lastly, if you're worried about the future in this rising rate environment, Bank of America analysts recommend following the money with dividend ETFs like the Spider Vanguard and Schwab dividend ETFs, especially as the market volatility is expected to continue. Carl?